Well, hello. Well, if you're here, it's because you want to see something about trading. Maybe catch the silver bullet. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the coffee-driven Scruffy trader. And what I'm trying to do is kind of do little videos, giving you an insight into what I do for a living, and maybe show you a trick or two along the way. So if that sounds good, please click the little subscribe button. Genuinely helps, and we'll have a little chat. So what are we having a little chat about over coffee today? Well, it's my favourite subject really. Less is more. But it's wrapped up in a different style. Because this week I've been having a celebration week. I always have this week off every year because it's my wedding anniversary falls and it's also my birthday. So normally I'm on a plane sunning myself and one thing and another. But obviously with world events, that idea is out the window. So what I do is I have a kind of blackout, if you like. I just switch all my phones off and I just reset the batteries. But there's a little part of me can't resist having a little look. And while I was glancing through the chat group that I run, and I did pop a trade on, it raised an idea because of that one trade that I put on. And I emphasize one. You see, within the chat, often is, I've got to get in, I need this, I need that. You know, this one's overstretched, this one's ready to go. But I think sometimes they miss the big picture by zeroing in on a small time frame and then wonder why at the end of the week they're losing. Well, we're going to discuss that, and it's the search for the silver bullet. And that's right. What do silver bullets have in common? Werewolves. And the markets are like a werewolf. Because when you're looking at them on the surface, during the day, they look easy, peaceful even. And then you see all the big mansions in the big gothic films and everything. But when the night comes and the terrors arise, this little fella pops up. And it's that moment when you're in the markets. So how do you slay this beast? How do you find the silver bullet to defeat the werewolf of the market? Or if Dooku's watching this, the demon, because he does like to paint pictures on the charts. It's simple. Less is more. Look at the bigger picture. Get a bias from the bigger picture. Come down a time frame. Is that bias still there? Yes. Move it down to a next time frame. So you'll start at a daily, you'll look at a 4 hour, and you come down to a trade idea which is on the hourly. And this is what you saw in the swing trade. And you don't even have to go down as far as the hourly. But if those planets align, and it's not a full moon, because a full moon means this fella, you're probably safe to walk the moors. And some of you older guys might get that reference. Stay on the road, keep out of the moors. Yes, I am an old child. I'll give you a clue. It's the American Werewolf in London. I was watching it last night. So, let me jump on the whiteboard and I'll show you what I mean about search for a silver bullet. And also a little drill that will help you with your trading.
Well, we're waiting.
Blue moon, I saw you standing alone. Okay guys, So let us continue our search for the silver bullet. But before I do, I just want to give a couple of shout outs to Finney and Rich, who kindly sent me a mug and some beer to put in it. Cheers, guys. And a very special Star Wars salute to Nick, who kindly sent me my latest edition of artwork for my Star Wars collection in my office. Very grateful, very, very grateful. So you guys genuinely put the cherry on the cake this week. Well done. So let me get back to the silver bullet and what it means. Well, think of it along these lines. If you're an eager young trader and you're finally getting yourself a job with a good prop firm or a good bank, do you really think they're going to let you loose on the market straight away? Of course they're not. You know, they've got a big investment in you. And that investment, if they get it wrong, is going to cost a lot of money. So how do they limit the damage, but at the same time teach you to be a better trader? Well, it's very simple. Less is more. Or in this case, the silver bullet. So behind me I wrote a couple of bullet points. One trade, one setup, one day. And I know you're looking at it and thinking, what on earth's the big fella on about? I just want a system. Give me a system. I'll be alright with a system. And then I can be rich and I can drive one of these.
You ding dong!
Give it to me again.
You ding dong!
Yeah, of course you will. And quite frankly, if that's what you think, go watch the Lambo Boys, because you're never going to make it as a trader. You're genuinely not. You might as well have the entertainment. You see, most of the time, trading is portrayed as very fast, in and out, and you see all these sort of Instagram posts and one thing and another saying they flip 200 quid into 20 grand in a month. No. If it was that easy, Goldman Sachs would be the richest company on the planet, because those guys are 1,000 times better than the people you're seeing on Instagram. So that kind of tells you that it's not really possible. But what you can do is make a living from the crumbs that the big boys leave behind. And that's where the silver bullet comes into it. Because the big boys, believe it or not, are also looking for the crumbs that are left behind. And I know that sounds odd, but they are. Because all traders are looking for liquidity, we're looking for areas of interest, and we're looking for points of attraction where we can get the market to. And that's the way trading works. But until you understand the mechanics of how the charts are operating, you're little more than, well, this. So you have to start building up your knowledge. And the way it's done is very simple. One trade, one setup, one day. And I know you're still scratching your head. So let me explain it. What they do is a drill, day one. Once you've passed your initial training, they'll say, right, you're allowed this week one trade. You're allowed to use one setup. And once you've used it, that is it for the week, one day. So if you see your setup on a Monday and you press the button, that's it. You've had your one day, your one trade, and your one setup. But what if there was a better setup on the Thursday? You can't take it, because you've already fired your silver bullet. So what it starts to teach you is patience. And patience is the key to surviving in trading. I watch it every day on the various sort of groups and everything that I look at. And they're always, got to be in, got to do this, got to get in. Oh yeah, this is up. It's all noise and chitter chatter. And the ultimate question you need to ask at the end of each week is, did you make money? And the guy who makes money is the guy with a silver bullet.
It has to be the silver bullet!
Simple. You know, think about it. If you go into war, who kills more soldiers? The machine gunner, who's just basically cannon fodder on the front line? Or a marksman, picks his target and has a higher kill count at the end of the time. But he's also safer because he's hidden and he's shooting from a place of advantage. Silver bullet. So what you're trying to achieve all the time is a safer trade that can produce better results. So how do you do it? What is the criteria? Well, it's top-down analysis is the easiest way to do it. So you will start with a monthly chart. I know you're looking at it thinking, bloody monthly chart, what's that got to do with 5 minutes? You'll be amazed what it can do. But if you've got a trend that you can clearly see is up on the monthly, you've already got a bias. And you drop it down to a weekly chart. And if that is still going in the same direction, you've got a confirmation because those two are in alignment. Then you drop it down onto a day chart, where you get your ideas from. And if that is going up, you have 3 confirmations. How do you do it? Very simple. Moving average. Use a 50 period moving average. If all 3 of them are above it, is it not common sense to assume that the market is moving up? So now you have a bias of up. How do you apply that to a trade? Well, if we are looking at swing trading, you then look at the next 2 confirmations down. So what you want to be doing is you have a 4-hour chart and you are looking for it also to be up. You are confirmed for the day. So you've now got a bias for the week from monthly, weekly, daily. So it's telling you this week is buy. You need to have a confirmation for the day. So you're now looking at your daily and your 4-hourly to see if they confirm. Well, if they're going up, then this is the day. Today's the day for the trade. And then all you need to do is look at an hourly chart and whatever is going on, say you're using an RSI, just for argument's sake, you wait for that oscillator to come down, and regardless of what the price is doing, you are waiting for that to marry up to that, and you buy. In other words, you're buying low to sell it high. And why is that? Because you've had a confirmation all the way down. And I hope that kind of makes sense. That's very watered. In fact, I'll jump onto a chart and I'll kind of show you what I mean. But essentially what you're doing is direction, direction, direction. So that's 3 times. Result. Are these 2 direction? That confirms the day. And then you're using that one and that one to get in. Simple. And it really is as simple as that. And that's just using one indicator and the price itself. So let me jump onto the chart and I'll give you a quick example. Okay guys, so let me pull up a chart and I'll show you a recent setup. And the reason why I say recent is because I'm not into these cherry-picked charts from a trading view that's been rolled back. I don't think that's very ethical. And the Scruffy Squad will kind of testify that whenever I do a live stream trading for them, or whenever we chatting, it's here and now. It's always relevant. And a lot of the time, when we talk in setups and things, I'll get the guys themselves to pick the chart. And then that way, there's no bias from me. And I think that's the fairest way. And if you're interested in it, It's as cheap as chips and you'll get a lot of value out of it. And you find all the details in the description below. But let me pull up a chart and I'll show you what I'm talking about. So I always start my day with this basket of products. It's primarily my go-to window of the world, as they call it. And it's your usual suspects, your FTSE, your DAX, cable, euro, that sort of thing. Why? Because they move every day. But as with most things, just because they're moving, you need to have some kind of confirmation bias as to the direction. Because a lot of the time, if you get the direction right, it'll forgive a bad entry. So that's why this drilling down is quite important. So let me pull up a main chart and we'll use one of these. Euro dollar's as good as it gets. Why? Because it's the biggest market and everybody looks at it. So let me have a look. So we'll get off the weekend onto the last chart. And straight away when you're looking at this, you're thinking, well, what's the big fella looking at? Where's all the lines? Where's all the indicators? Well, we don't need an indicator, so we'll get rid of that for now. We're looking for confirmation biases and to really drill into the trade that we want. So let me see. Talking of things that I want. Oh, coffee, you're good. Do you know what I wanted for my birthday? I wanted something really special.
Matron, take them away.
You dirty old man. And you didn't do it.
So you mean you're not happy with your birthday present?
I didn't get me birthday present.
You did get a birthday present?
What?
You got your t-shirts and your figures?
I got a t-shirt. Do you know? I got that. But I asked for a very special gold bikini. And she said, get stuffed. That's not very ladylike of you, was it?
I didn't say get stuffed. I just couldn't find one.
It was get stuffed. Right. What you see when you're on this, and I know if you're looking at it, you think, what on earth is this lunatic on about? This is my life, and this is real world. And when you are trading and one thing and another, what better way than spending it with your best friend? Anyway, let's get back to this. So, monthly chart. How do you get a bias from it? Drop yourself on a moving average as we were discussing. In this case, a 50. Doesn't necessarily have to be a 50. It could be any moving average you choose, whether it's a 20, 50, 89, 100, 200, anything. The idea is just to show you a bias that's confirmed right through the time frames. A 50 is a good barometer of bias, by the way. It's well observed in the markets, as is the 220. So let us have a look. So what are we doing now? Well, we are trading above it. So the bias at this moment is up. Take it to the weekly. Well, for the last 2 weeks, it is now above it. It's actually been above it a long time, but it did dip under. So you're kind of resetting your clock at that point. So anything past that line, we know we are long, which we are. Daily. Well, is the daily trading above the moving average as well? Well, it is now, because we are looking at this moment in time. So crossed here on this candle. All right. So we know from there it is up. So we've now got 3 biases. When we're coming into the market, we've looked at monthly, weekly, daily, and they're all telling you to go long. Right. What do we do now? Now we're looking for the day bias. When do we actually get into this thing? Well, the 4-hour is now aligning with the daily. So we have full alignment across. All right. Happy days. How do we get in? Well, this is where it gets a little bit more tricky. This is where you have to use your little noggin, and why it's called the silver bullet, because you've waited and waited and waited for the perfect opportunity to get in. So now we're dropping it down to the hourly. We're not going to go past the hour in this exercise, simply because it's a swing trading exercise. Okay. So what's this telling us? Well, there's a couple of things we can do. We can say, right, we're getting in on the cross of the moving average. Now, again, it doesn't have to be this moving average. It can be a 20, it can be an 8. An 8 is a good T-line. Why is that? If you're sort of wanting to be in and out the market quick, you wait till it's above the 8, come back and touch, and then get in. Likewise with a 20, etc. Or, as I alluded to on the whiteboard, an RSI. Why an RSI? Because an RSI is a universal indicator that everybody looks at, and it can be used in one of two ways, and I'll show you how to use it in this exercise. So if I pull out an RSI, just standard settings, you don't need to be anything crazy with it. Again, you can manipulate this, you can slow it down, speed it up, but for the purpose of this exercise, we're just going to use the 14. Now, the two ways that I'm alluding to is you can have a center line cross or an overbought, oversold situation. And they both are showing you momentum, because that's essentially what this is for. So we're waiting and we're waiting and we're waiting. Has it gone into the bottom for it to curl up oversold? No, it hasn't, but it did cross the center line, which kind of tells you the momentum's pushing. That's what it's for, because you'll be amazed how often the center line reacts. Now, how do you use the center line? Daylight is the word. So basically what you can do is you go, right, okay, it's right the way down, it's come up, it's crossed at this point, and I can see daylight. In other words, you can see straight through. So that's giving you an entry here on this candle. Just move that over so you can see it. So that candle there is pushed up and created daylight. We can now see it. Go time. Where do you get in? There. Nice and simple. All right. Why there? Because you always let the market come to you. That way, you're never chasing your tail. And if you've got it wrong, the market just turns around and keeps on going the other way, leaves you behind, and you're safe. Simple way. Now, you can use the tails, you can use the bodies. I personally use the tails. If it's an excessive wick, then use a bit of common sense. But that's it. And you just leave it. But there's a little bit of a kicker here, because that turned round and went back below the 50. That cancels the trade off. You go, right, that's it, it's no good. We wait. And what you're waiting for is, with a bit of luck, that might work its way all the way down here, drag the price with it, and you get in at a better price. Or it happens on a situation like this, where it's turned round. So it's crossing, well, that's the cross, but the daylight is actually on this candle here, this one. Right? So again, you might be a little bit late to the party with this one. And you're looking at it and you're thinking, well, I've missed all of that. This is a swing trade. Who cares? What you are looking to do is just get an illogical price. And gets in, it hardly looks back, and it's off to the races. And it's well and truly off to the races. So where do you place your stops? Things like that. Well, you can look at it this way. You can go, I like 2 swing points. So first one is underneath there. There's the second one. which is kind of down here. Pretty risky, but you will enter there. Even if you went down to the bottom of this, which is there, that is quite a bit. Looking for 1-to-1. Well, you get it. That is there. All right. So even on that deep risk, if you want to call it risk, it still gives you 1-to-1 because you would have caught it here. Well, let's have a look, see how long that took to get to. So it's roughly about there. We know it was that candle. There we go. So it took it a day, 2 days, nearly 2 days, and you got a decent return on it. So how's that, guys? Is that not simple? And that was just looking at a monthly chart, a weekly and a daily, drilling it right the way down to a 1 hour, and then just let it play out over a day or so. Simple stuff. And that is basically one trade, one setup, 1 day. Easy. Anyway, so I'm going to enjoy my coffee. I'm going to go down and see if Winky's willing to give up the goods.
Splendid girl, and so helpful. Do you know she's been showing me how to stick the pole up?
Probably not, because we're old. And enjoy the rest of the weekend. So as always, guys, do what you love, do what you'll follow. See you all in the next one.